Hey guys, Crypto Crypto here with a video update. So this video update, I actually recorded a full video about 30 minutes long on Sunday or yesterday, and I was not expecting the PA that played out over the last 24 hours to play out. And so that video, a lot of it talked about what we're looking for at these lows that we were at, but what I was looking for in terms of positive bullish signs in this region, which we've now broken through. And a lot of that was analysis on the implications, assuming that 60K was going to hold, meaning this low right here that we've now hit was going to hold. And so obviously, the last 24 hours, we saw a straight meltdown through that zone, hitting the local invalidation for this idea. And so I had to kind of re-edit that video and add on some more context now that this level is broken. I'm going to start it off by showing you guys clips from the video that I recorded yesterday, because the content, even though we've now hit local invalidation, a lot of the content still applies. And so I'm going to show you guys that clip. And then after that clip is done, I'll then talk about some of the changes that have happened now that 60K has been broken. So you guys kind of get an idea of exactly what has changed with this recent development over the last 24 hours. So we'll go ahead and play that clip. Keep in mind, what I'm talking about in that clip is under the assumption that 60K is going to hold. So there's going to be some slight changes, and we'll discuss it after the clip plays. And let's just jump right into it. Now let's go to the chart here, guys. And let's talk about lower time frame price action. So in previous tweets that I've made, I've basically said you want to look out for an impulse. Thus far, off of these highs, we have a series of corrective moves, three-legged overlapping structures. This is not impulsive price action. This is corrective price action. That's what we want to see, of course. Impulsive price action being nice, clean 5-wave moves without that overlapping between the impulses. And so that's what we have here. And you can see here how distinctly different this structure is to this one, where we get these nice, sharp impulses. And this one we get impulses, but you get repeated overlaps on those impulses, and you're not getting clear 5 waves. You're getting 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. So this is the definition of corrective price action. This is the definition of impulsive price action. And we want to see impulsive price action to the upside, and we want to see corrective price action to the downside. That implies that we are in an uptrend. So that being said, guys, and we're looking for some sort of a bottoming structure to occur into this green zone here. If we're right, then we shouldn't go below 60K. And what we're looking for then is we're looking for the next impulse like this to present itself. We're looking for a lower time frame impulse to start. So in the same way that this impulse has 5 waves, each of these 5 waves, or each of these 3 impulsive waves within the 5-wave move, should have impulsive price action themselves. This first one was a little bit tricky. We call this a leading diagonal. It's kind of like a special case scenario, or like a unique scenario. But again, what we're looking for is like a small impulse here to indicate that this larger wave has begun. And again, I'll talk about here in a minute time expectations for this move, as well as price targets, because there is some nuances here that I want to cover. But again, we're looking for this sort of a lower time frame impulse. Okay, we haven't got one yet, and we're waiting to get one for confirmation. So let's go ahead and talk about the higher time frames now. What I want to kind of emphasize here is, in my last kind of macro update, I talked about the structure that I believed was most likely. That is, we had our first major wave here. We had our wave 2 correction. We were working on the 3rd wave here. We were going to get a major 4th correction after that. And then we were going to get this 5th wave blow off top to follow. So with developing price action, and based on the length of time that this correction has taken, I've now changed my primary expectation to be a little bit different, okay? And this is a count that I actually discussed in that video, but I said it was less likely of the two. I now think that it's a little bit more likely, and I'll go into why here in a second. But I think that what's probably more likely here, based on everything that I'm seeing in developing price action, I think it's probably more likely that our 3rd wave did actually complete at these highs here, that this correction, with the amount of time that it's taking, is likely our major 4th wave. And what that means is that the next leg to the upside is going to be that leg that ultimately leads to our blow off top, okay? In terms of upside targets, this doesn't change too much. It still means 100K plus, but it does mean that this move could happen a lot quicker than most are expecting. Again, in one of my prior YouTube videos, I also talked about how I expect our top for this cycle to be put in by October. So if I go ahead and mark that off here, that looks like a top by the end of October, means that we would top out for Bitcoin by this dotted line here, okay? This structure also jives better with this idea, because in the prior one we had, again, we were still in our major 3rd, we would still expect a major 4th, and then we'd expect a major 5th. That would probably push us past this time deadline, okay? And again, time is always flexible, so this is not like a requirement that we must top by October for the thesis to remain intact. The thesis is confirmed now. We are impulsing out for a fifth wave after basing out at 15K without invalidating higher time frame structure, making an all-time high before the halving. The thesis is all but confirmed now. Now we're just looking at when this top is going to be put in. And more likely than not, as I've previously said, I expect it to be put in this year. So this type of a structure where we were still working on our third, then we get our fourth, then we get our fifth, likely pushes us past that deadline. Mainly because if this correction here is not the major fourth, it has taken already 60 days to play out. And if this was a minor correction within this larger third, then the major fourth that's coming up would take longer than 60 days to play out, probably 90 to 100 days to play out. Things are just extend a little bit too far, in my opinion. We'll also talk about why other factors that make me believe that this was in fact our third wave complete here. Let's go ahead and look at the structure. So previously I said again, we know that we completed our first and our second here, and then we had this impulsive move, which I know a lot of people were looking at as a corrective move, but we identified this as a clean impulse. And it got such a deep retracement, but we didn't invalidate it. And so this third wave, I believe we got this subwave 1, 2, 3, 4, 5. And that this corrective move was actually the fourth subwave of this third wave. This third wave is now complete, in my opinion, and this is our major fourth wave that we were looking for earlier. And we are now, in my opinion, in the final fifth wave to the upside. Within that fifth wave, we've completed the first subwave. We're working on the second subwave. We have the major third left to go. The fourth, which is going to be similar to this in terms of length of consolidation, probably maybe a little bit shorter because we're starting to go at this point parabolic. And then we'll finish up with our fifth wave again, I'm expecting before the end of October of this year. That doesn't leave us with too much time. Now, is this possible? It's not only possible, it's quite likely in my opinion. Again, we know that as we move up, this rate of ascent should continue to get steeper and sharper. The consolidation should continue to get less lengthy in terms of time. And so we should simply see this sort of aggressive rise at a higher slope as we move up for our blow off top. And so it makes a lot of sense that we do see our top by October. Again, even if we were to continue with this rate of ascent, okay, which we should not, that puts us at 93,000 by the end of October. More likely than not, again, we're going to go steeper here. So odds are, again, that we're going to see 100K plus and the top before the end of October. Just to go over this real quick, guys, before I end this video, some have asked me what happens if we go below 60K, and I'll touch on that. As much as I don't think it's likely, it's important to address in case invalidation does get hit. There's a reason that we have invalidation level. There's a reason that I never say that this is 100% going to happen because we don't know that. So it's unlikely as I see it happening. I want to cover what it means if 60K is broken because I've had some questions, some people asking about that. To put it very simply, guys, what it means is that this impulse failed to see continuation, okay? This impulse was invalidated. Momentum was not as strong as we thought. The next leg up has not yet begun. This correction that started back at 73K is still playing out. That's all it means, okay? We've seen a bunch of chop. If we break 60K here, the impulse that we identified has been invalidated, which means the chop continues. That doesn't mean that we can't take 60K and then reverse into a new impulse, okay? That's certainly possible. It simply means that what we identified as the start of the fifth leg is no longer the start, and we're going to create a new start. And that could happen on a wick below 60K, where we then impulse again, and that's the real start of the final fifth leg. That could happen on a move back down below this level at 53K, which I know some people are looking at, okay? Maybe we go down here and then we impulse. And as I previously said back when we were at these lows at 58K, it doesn't matter if we bottomed here or if we go to 56K or if we go to 54K, which is what some were targeting, or if we go to 52K. As long as we hold above 38K, we're going to see another impulse to the upside, and it just means that this correction went deeper than expected. So if we break 60K, it's not the end of the world. It would be a little bit surprising to me for a number of reasons, and I don't think it's going to happen, but I can't say it's impossible. Nothing in this space is technically impossible. But if 60K were to break, it's not the end of the world. It does mean that we now have to wait longer for that impulse to play out, but that's about it.
All right, guys. So in the clip that you guys just watched, again, that was recorded yesterday prior to this meltdown. Basically what I was talking about, I cut some of those parts out of the clip, but what I was talking about
in the parts that I removed was I was looking for data to support absorption. We didn't get those signs of absorption that I wanted to see on lower timeframes as we pushed through this region. So for me, that taking a mental note of that is something that I need to look at. Now, there's some other implications here as well, but I didn't want the video to stretch out too long. And because 60K has been hit, I thought let's just cut to the chase here. So what does it mean that 60K has been hit? As you guys heard at the end of that last video clip, all it basically means is that this fourth wave is still in play. It's still in progress. And the fifth wave that I believed had started off of these lows has not quite yet begun, okay? Like I said in that video, before we even got this breakdown, I was already starting to lean towards this being our larger fourth based on the amount of time that had elapsed. But now that we've actually broken this level here and this correction has become even larger now, it only further solidifies the idea that I shared in the video yesterday that this is in fact our larger fourth playing out here. And what comes next is going to be our final fifth. And again, this actually works out well because as I explained in that last video, the October kind of time target, I should say, for the cycle top or the end of this fifth wave would have kind of been very hard to achieve if we were still working on this major third. But now that we can say that based on the amount of time that has elapsed in this correction, that this is likely the major fourth, it lines up a lot better with our top being in by potentially October of this year. And so just to give you guys, again, some context, each of these waves to the upside should get more aggressive as we move up. You can see the first one, the rate of ascent as pictured, the next one, the rate of ascent as pictured. They're going to continue to get steeper and steeper. And so the next leg up should again be more aggressive than what we've seen thus far. This fifth leg is going to be our final fifth leg to the upside of this massive impulse that started off at 15K. And it will also be the most aggressive, the most vertical of all the moves that we've seen thus far. And so the rate of ascent should be even more aggressive than what we've seen on this third wave so far. And again, that totally depends on when this fourth wave ends, right? This fifth wave doesn't begin until this fourth wave completes. And in the coming days, we'll get a better idea of where that may complete. But once it does complete, expect the ascent of this fifth wave to be even more aggressive than the third. With that being said, guys, let's talk about the lower timeframes here. And I want to point out some data. We'll talk about some data here that I've been looking at. And I tweeted about this as well, but there's some data here that supports the idea that, again, now that we've hit 60K, it opens up the doors to much lower. But realistically, I can't really see too much lower from here. And we'll talk about why in a second. But really, guys, the same way that we had a 5-wave move here and invalidation is the origin of this impulse, we do have another 5-wave move here, and invalidation is the origin of that impulse. But we shouldn't even go below 38K realistically. It would take some massive sell pressure to get us back down to these levels. And with the data that I'm about to show you, I'm going to explain to you guys why I think that's probably unlikely. Ideally, we can get a higher low here, and this would form a really clean looking range with a little bit of a deviation below the lows. And now we're putting in a higher low. That's ideal. That's like the perfect sort of accumulation range. I'm going to go ahead and remove this now invalidated impulse. This would be perfect if we found a bottom within this zone and put in a higher low here. That would be ideal. And in a situation like that, there's a couple of levels that I'm looking at. I'll point them out here in a minute. But in a situation like that, we're closer to the end of this correction than you think, even though we did hit 60K as invalidation, okay? And again, that just means that our impulse hasn't started yet, but it doesn't necessarily mean that we have tons of downside left. That's the key that you want to take away from here. If we do bleed lower, the next biggest area of support is going to be this cluster of demand right here. That's at about 50 to 53K. I know a lot of people are eyeing up this level. It's a logical place to test if we lose 56K. But I'll talk about again in a minute why I find it hard to, in the current state of things, imagine much more of a significant flush to the downside. On the lower time frames, guys, let's go ahead and take a look at key levels here, right? So if this is indeed our bottom, in fact, we already have a nice wick above the orange zone. But yeah, if this is indeed our bottom, or we're going to bottom somewhere above 56K, the key area that we need to get above now is going to be this cluster right here. And I'm going to make this red so it's easy to see. And you can see that this is the cluster that preceded this last leg to the downside that broke our key lows here, okay? This cluster is at around 63 to 65K. We're currently seeing a little bit of a bounce here, which is nice. It's not impulsive yet. And just like I said in the last video, the only way that we're going to get confirmation that the next leg up has started is if we get a clear impulsive move. Until then, any sort of move to the upside is simply probably part of this corrective structure, the same way that we get these sort of relief bounces as we go down. Until we get a clear impulse to the upside, it's likely that we're still in some sort of a corrective structure. Again, if this is our bottom, if we are making a higher low here above 56K, then it's possible that even if we don't move up impulsively off this low, it's possible that we are forming a bottom in some sort of a corrective structure. Again, one of my favorites and most common ones that I like to point out is some sort of a triangular consolidation structure. So something like this could be playing out before the impulse occurs. And again, this initial leg of that impulse is the one that we want to catch. We want to identify the impulsive price action on the lower time frames so that we can catch the higher time frame move. But point being that until we get past red, it's possible that we chop around here for some time. So again, if this is our bottom, then we could chop around here for some days, even a week or two, I would say. A couple of weeks is not out of the question before seeing our impulse actually begin. And again, the final leg to the upside, you expect it to be very aggressive. Again, the slope of ascent should be very aggressive. The amount of price covered and the amount of time that will elapse should be even more aggressive. So just to give you guys some context to put things into perspective, our fifth wave of the third, we went from 38,000 to 74,000. That's a $36,000 move in a month and a half. This next leg should cover even more ground in that same amount of time. So even if we take to the end of July, let's say, to begin that next impulse, that still gives us, so let's say we have August, September, it gives us 3 months to put in our top. And if we can cover $30,000 in a month and a half at minimum, that means that we should cover 60,000 in 3 months at minimum. 60,000 from 60K puts us at 120K by October, which again lines up with the rate of ascent, angle of ascent, increase in acceleration that I showed you guys earlier that gives us like a minimum of like 90K by October, right? So everything points to, this next move being explosive. We have enough time for it to play out. October seems like it's very soon, but we have plenty of time because once this breakout starts, the move's going to be very aggressive. What happens here is key. And we're going to talk about alts a little bit in this video. That wasn't my plan, but it's important to talk about that in relation to what we have here. This sort of consolidation here at the lows, if we get it, depending on how long it lasts, can give us a little bit of an alt window, a little bit of an alt run window. And I previously tweeted about this on Twitter, specifically talking about how a lot of alts have held up very, very well on this drop on Bitcoin. And that means something, okay? What I think it means is we get a small window of alt outperformance. I previously said I'm long on Matic for that reason. CRV is another one that looks really, really good here, CVX, etc. You can look at all those alts. I don't even know if they actually made legs down with this leg down on Bitcoin. I know CVX went down but put in a higher low. CRV actually did go down but has bounced back. I mean, it's very, very tame compared to what Bitcoin has done here. And so if Bitcoin then holds this range and consolidates for a week or 2 weeks or 3 weeks, that window of time is when those alts that have held up very well are going to get some quick runs in before Bitcoin steals the show again, okay? So something to keep in mind, and that's totally going to depend on how long we consolidate here. For the longer that we consolidate in this region, assuming the bottom is above 56K, the more time alts are going to have to do their thing before Bitcoin gets ready to rip for that final leg to the upside. If we do continue lower here, obviously, next area of interest being 53K-ish. Like I said, we need more price action to confirm, but it would surprise me to get down here. Why? Let's talk a little bit about why I think that downside is relatively limited from current levels, despite this seemingly endless bleed that we've had so far. So this is a chart that shows us our liquidations, right? And the red bars are long liquidations, the green bars are short liquidations. And we can see that currently in today's daily candle, the amount of liquidations that we've got, the long liquidations that we've got, have actually been more significant, a greater amount of long liquidations than we saw here at our 58K bottom, almost reaching levels of liquidations that we saw here at our 63K lows. Basically, a very significant amount of liquidations have already occurred at this point. We're still putting in a higher low. We've seen more liquidations on this drop than we've seen since April. So it's been a few months since we've seen liquidations to this extent. We've already gotten a massive amount of long liquidations to the downside already. We can also take a look at Velo Data here, and we can see that funding keeps flipping back and forth between positive and negative. In other words, meaning it's basically very neutral. It's not overheated at all right now. We can also see that our spot premium is alive and strong, and we know that's a very bullish, positive sign. So we've seen a ton of long liquidations. Open interest is high, but the key that I want to point out here is with the amount of long liquidations that we've seen and with open interest barely moving down, it implies to me that we have probably a buildup of short positions that need to be liquidated. And so despite open interest being relatively high, being at our danger zone, I think a good chunk of this is going to be shorts that have piled in. I think that those will eventually get liquidated once we break out to the upside. So this open interest may stay elevated a little bit longer than we'd normally expect because a good portion of this open interest could be made up of shorts that are holding right now. Again, at some point, those shorts have to cover, right? Two ways they cover: they either take profit, which is good for them, or price moves up too aggressively and they're forced to buy back, which causes price to move up faster. Either way, when they take profit or when they cover because they have to buy to do that. So they have to push price up to some extent when they do close those short positions. Further confluence or confidence that we do have a big buildup of shorts here and that a lot of longs have been flushed out, we can actually take a look at
these liquidation levels here on Coinglass to kind of give us an idea. Again, these are estimations. Don't take this as like rock hard data that we know for a fact to be truth. These are all estimations, but they're fairly accurate for the most part. And we can see here, this is a liquidation map. We'll look at this bottom one, but it basically shows the amount of estimated liquidations on Bitcoin depending on price. So if we're currently at this dotted red line here, about 60K, you can see that we have some long liquidations down to about 58K. Again, that's on our area of support. And we have short liquidations above us all the way up to 64K and above. This is the daily. We can go to the 7-day to see kind of a bigger perspective, and we can go to the monthly as well to get even more context. And what you can take away from this, guys, is that, again, based on these estimates, the amount of actual longs that are left to be liquidated is minuscule compared to the amount of shorts that are left to be liquidated. We can see here that up to about 72K, there's a cumulative short liquidation leverage of 10.6 billion. Now, again, these are estimates. Don't take these numbers too seriously. We just want to compare them relative to each other. Okay. So if this is 10.6 billion, the estimate's down to around 53K, which is a key area of demand that I talked about. There's only about 750 million cumulative long liquidations. Okay. Now, again, the numbers may not be so accurate, but what we can see here is that there's basically 10 times as many shorts that are likely to be liquidated versus longs. Okay. So liquidity is certainly now to the upside. We've taken a lot of long liquidations to the downside. We've taken a lot of liquidity to the downside. We have a lot more shorts ready to be liquidated on a pushback to the upside. So the damage in terms of liquidations, I believe, has been done for the most part on longs. Shorts remain relatively unscathed so far. And that's why I have kind of emphasized that targeting very low levels down here, there's only two ways that happens, as I've previously talked about. You either get major long liquidations, or you get forced selling from spot. And forced selling from spot doesn't make sense if we're in a larger reaccumulation range. Their goal is not to sell to you here. Their goal is to buy from you here, right? So the only way really then, if we're not getting forced aggressive spot selling down to these levels, is for liquidations. And if we've already just seen that a majority of longs have been liquidated at this point in time, and there's not that much long liquidity left to take on the downside, then it's hard to argue that we're going to get some sort of a major meltdown. So with that being said, I do think that the worst of the damage is done, but we do need to see confirmation now in the form of a new impulse to start. This one got invalidated. We need to see a new impulse begin. That could take some time. Okay. That could take a little bit of time here if Bitcoin decides to consolidate. But in that time, that's an opportunity for some of our alts. With that being said, guys, I think that has pretty much covered what I wanted to get across in this video. I know that my thoughts in this video may be a little bit fragmented because, again, I'm trying to combine my thoughts from yesterday and my thoughts for today. But the key takeaway here is that despite 60K being hit, while it does open up the doors for lower, our metrics are showing us that the likelihood of a much larger flush is slim right now based on the metrics that I shared with you guys. And ultimately, I'm looking for a bottom to form here and for the next impulse to begin for confirmation that our final fifth wave to the upside has officially begun. So I hope that answered your question, guys. If you guys enjoyed this video, please like, share, and subscribe. And I will catch you guys in the next one.